All right, good morning, everybody. How you guys doing today? In a weird twist of events, you guys have to look at my face today. Sorry about that. I'm muted. Um, how's that? Can you hear me now? Awesome. Sorry, guys. So we're doing some recordings today. You guys get to look at my face. I hope that's okay. Still excited to be here. I know it's a face reveal. As you guys can see, I definitely have a face for radio. It's going to be a great day today, guys. We're going to have some fun. You're about to see how animated I am when you can't see me. I move a lot when I talk, and that's okay. We're going to do what we do, guys. We're going to talk about patterns. We're going to talk about rules. We're going to do everything that we need to do. I'm probably not going to make much eye contact with the camera, but that's okay. First and foremost, guys, we're checking news. Every morning we're checking news. Today is Tuesday, May 21st, and right now at this very moment, FOMC member Waller is speaking. It's expected to be medium impact and not a bad time to just relax and see what happens in the market. Medium impact, high impact, these are the things that can create challenges. These are the things that can create spikes and bumps and jumps and all those things. Hey, what's up, Dina? Um, and just knowing when news is, knowing that there's something going on that can make the market. Hey, good morning, Miss Jen. Sorry it's this face, but what are you going to do? Um, Choosing not to trade when there's something high impact, when there's something medium impact, staying out of the way of the response. Good morning, Muser. We're not, hey, good morning, Erla. Not trading what he says, but rather knowing that it can create a reaction is what we're doing here. And then everything that I talk about, guys, I mean, every day we're coming from the education page. You guys can see my screen as well, right? Just want to make sure. It's making me look at both of them, so it's kind of a weird thing for me. Okay, cool. I'm going to take my picture off of there on my side. Everything that you need, guys, every answer that you could ever hope for is coming from this education page. And there's two sections, really. There's a software user guide, and I'm going to click on that one first. And this is really your NinjaTrader how-to. Anything and everything that you need about NinjaTrader is right here. Whether it is muting the chat room, that's not NinjaTrader, but closing workspaces, opening workspaces, scaling charts, setting up stops and targets. All that's available to you right here in the user guide. There is also using your screen capture software so that you can take pictures and present in the room, starting over, deleting everything, going fresh. Sometimes it's nice just to do that as well. Building charts, live access, muting the room, screen capture. I mean, anything and everything. NinjaTrader and really Discord related is going to be right here in the user guide. And then the other one is the trading guide. This is all the answers, guys. If you have a question about one of the trades I teach, you're going to find it here. If you have a question about management, you're going to find it here. So the first thing we're going to focus on from the tutorial section, from the trader guide, is here in the glossary of common terms. We're going to talk about a high probability trend trade today. We do this for a couple of reasons. You know, someone asked me yesterday, hey, what's the best trade for a new user? This is it, guys. In my opinion, the high probability trend trade is what sets you up for success. The high probability trend trade is what builds a foundation. The high probability trend trade is going to teach you to read your charts. And a high probability trend trade is defined when each indicator on every chart agrees for the rules of the trade. All your triggers are the strongest. There's nothing between you and your targets, no termination conditions. This is a trade that typically wins 70 to 80% of the time. This is a trade that creates an awful lot of confidence through the memory of success, but most importantly, and I think this is the biggest key on it, is it allows you to learn to read your charts. It puts you in a position to be profitable, to be consistent, while you learn to be a chart reader. And chart reading is about 90% of what we do every day. Some people would argue that it's 95% of what we do every day. It's looking at our indicators, waiting for advantages. Everything is based on a statistical advantage. And then when those advantages are present, when your ability to read the chart says, yes, your rules are met, that's that 10%. That's when we're looking for the trade. So a little bit of study, is going to have you understanding where the market is likely to continue, using that point for entry for the high probability trend trade. It's going to let you understand where the market is likely to go, and this is going to help you set up targets. And then finally, where the market is likely to stop is going to allow you to not trade into these key areas that you see on your large chart, to make sure that you're not trading into areas that could create a reversal where decisions are being made by the people in charge. So we're going to focus on the high probability trend trade. We're going to take about an hour to do it. The first hour is very much a lecture. And the high probability trend trade is only 3 rules, guys. These 3 rules come together, and what they do is they form a trade. Each rule, hey Zora, provides an advantage, and it's the accumulation of the advantages that are going to create the trade. So your first rule says strong trigger lines, and strong trigger lines provide momentum. And your second rule says no termination conditions. Those are those likely to stop areas. And when you don't have termination conditions present, you're going to have room to your targets. And when you have room to your targets, we're just going to call that a clear path, right? Simplicity, as few words as possible. And then finally, when you do have momentum, when you do recognize that clear path, you're going to have an entry area where the market is most likely to continue. Hey, Cab, I can see you too. Well, I can't really. I can see your name. We're doing a little video series, and you guys are stuck with me. Sorry. This entry area is the best of the best. This is the point where the market is most likely to continue. I always encourage new users, keep it simple, keep it focused, learn to read your indicators. Good morning, Mr. Flowers. And allow yourself to be able to speak in terms of advantages. This is momentum. This is a clear path. This is an entry area. So we're going to break them each down. We're going to go over each rule. We're going to learn how to study them. And we're going to keep it very simple. Good morning, Jonathan. These 3 rules happen on only 2 charts. There is a large chart and a small chart. That's pretty technical, right? Your large chart on the most current bar, my brother's trying to distract me with Skype. This bar right here on this broad stroke of a brush is going to define direction, momentum, and areas. Direction is the easiest lesson that you're going to get today, guys. If the background is green, the market's going up. Let's look for rules to be met for high probability trend trades long. If the background is red, the market's going down. Let's look for rules to be met for high probability trend trade short. Let's keep ourselves on the right side of the large chart. Rules 1 and 2 are met on the large chart. Rule 1, remember, provides us momentum. Rule 2 is going to make sure there's nothing in our way, giving us that clear path. When these rules are met, you're going to turn your attention to a smaller, faster chart. It's going to take that one bar, that most current bar, and it's going to dissect it, kind of give you an X-ray. And you're going to see 15 to 30 bars. We're really just going to refine that broad stroke of a brush, and we're going to pinpoint exactly where the market is most likely to continue. And by doing so, by using this refinement chart, what it does is it allows you to reduce your risk. And by waiting for a pullback, it's going to allow you to increase your profit potential. And we use these 2 charts because they're very much just a representation of the forces in the market, guys. The large chart, sorry, I'm a little antsy. Too much coffee. The large chart represents the large crowd, the people in charge, the people that create trends, the people that establish momentum, all the people that are reacting to those very key areas that you're going to see on your charts. And then there's always a small crowd. There's always this group of yahoos that want to fight the large crowd. These people that want to say, hey, I know you're going up and I know there's a lot of strength, but we feel like maybe we should push down. And we love these guys because these guys are our refinement process. These are the guys that push us right back to the best of the best areas where you guys can get in and really put together that entry that reduces your risk, that maximizes your profit potential. So we're going to keep it very simple today. We're going to keep it very focused. And I have to go through this the same way I go through it every day, guys. Your step-by-step path to becoming a confident trader ASAP, the easiest way, the fastest way to do it is post in the room, guys. Everything. Everything that you see, if there's a question, post it in the room. If you take a trade, win, lose, or draw, post it in the room. One of the great things about this classroom and what we do is that you have the opportunity to have a private session with me every time you post in the room. We're going to look over your advantages. You're going to show me entries. You're going to show me exits. You're going to talk about what you saw. And the more you post in the room, I'm going to tell you right now, the people that post the most are the people that typically end up where they want to be the fastest. So when you are annotating a chart, guys, when you're dropping it in the room, the goal is for you to get the best feedback. And you have to tell me what you're reading, have to tell me what you see, what you think, what you feel. Give me the opportunity to really get in your head, and we'll make sure that your reads are correct. We'll make sure that your assessments, that your analysis is in line with what the indicators are saying. Make sure that on your large chart you're talking about momentum, you're talking about your path. Show me the timestamps on the bottom as well as the prices, because we are going to put those two charts together and make sure that both the large chart and the small chart are working together to give you the highest advantage. Show me your entry. Show me your exit. Sometimes you're going to show me an early entry. We're going to work together at getting you in the right entry with less risk. And sometimes you're going to show me a late entry. And we're going to see, well, maybe you were out of the room. Maybe you were fearful or uncertain. And we'll address all these things, guys, with just a simple display in the room. And then the second part is use your spreadsheet. Nexgen provides you a spreadsheet. It's in the Nexgen Study Picks folder. And if you go to the trading guide, I think it's right here, there is a link for the spreadsheet. If you want to start fresh, this trade tracking sheet, I'll give you the link. You can grab a brand new, fresh, unmolested spreadsheet, or you can steal this one that I'm putting in the room right now. This is my spreadsheet, guys. I update this every day. Every day I give you my updated version. And there's 4 tabs on this spreadsheet. The 4th tab, we'll start at the back and work our way forward. This is all the pictures that I've taken for class, all the pictures that I've stolen from you guys, putting in great pictures. It covers those likely to stop areas. It identifies patterns in the market. Some of them bring you success, and some of them rob you from success. But what happens is the more you're reading charts, the more you're going to see these patterns. There's a whole section dedicated to management. You adrenaline junkies, there's your NASDAQ. The green section is about 300 plus pictures that I've taken from you guys in the room. Pictures of high probability trend trades, pictures of what we call a medium probability trade. There's a lot of great entries, there's a lot of great management, and there's also some entries that were absolutely perfect that simply didn't work, and they still made their way in because all we do is we trade patterns, we trade statistical advantages, and the patterns never change. And anything that wins 70 to 80% of the time, you're prepared to take these losers. So we're focusing on execution a lot. There is very mechanical management for beginners. There's also entries going long and short for the high probability trend trade. And that's your 4th tab. Your goal should be to make the 3rd tab look like mine, guys. This is the exact same setup, and this is where you're going to put your pictures as you develop your trading plan. And like John Novak just said, a new user should study those perfect trades. They should open each picture, see the commonality, is that a word, in those trades, and you get it quickly. And John, I'm going to cover that, so thank you for your help there. Your 2nd tab is the 101 tab. Guys, this is where each rule for the high probability trend trade has been broken down. The green background represents rules being met, and the red background represents rules not being met. I'm going to give you a document that really gives you a game plan for using this to get to where you want to be the absolute fastest. And then finally is the 1st tab, and this is your trade journal. This is where you are going to be able to post every trade that you take. This is where you're going to be able to put in your trades and write how you felt and what was going on. And there's also an entire section dedicated for feedback. So whatever feedback you get from the room, from posting in the room, drop it on your chart, drop it in your notes section. And the whole idea for this 1st tab is that you're going to come back every morning and you're going to study the previous day's trades. You're going to ask yourself what worked and what didn't work and what felt easy and what kept you relaxed. And you're going to find a correlation between the rules being met and that very relaxed, that mellow feeling. And when you find yourself breaking the rules, taking chances, wishing and hoping, you're going to notice that it feels a little forced, that it makes you nervous, that those butterflies show up. And a brief historical study, guys, each morning, pour your coffee, load your charts, look at what you did yesterday. It's going to get you right for the day. You're going to be able to use these notes, right? Don't miss this setup. All right, I'm focused on that setup today. Or don't trade into a termination condition. I'm really going to look for those termination conditions. And the more you use this spreadsheet, guys, especially when you couple it, take the pictures, drop them in the room, get the feedback, get them into the spreadsheet and study them. Don't just let them go there to die. It pays huge dividends. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. This is the first part of every classroom, guys. We're going to break down each individual rule. We're going to be able to identify it. We're going to take pictures of it. We're going to talk about why it's an advantage. And we're just going to really focus on that basic foundation building. Simulate, practice, break some eggs. Get in there and pull the trigger, guys. If you're brand new and you think you see a trade, take the trade. If you think you see an opportunity, take it. It's okay. You're on simulator. But make sure that you're posting them in the room. Make sure that you're getting the feedback. Make sure that we're talking about what you see, what you did. Because the goal is that you always practice the correct rules, that you're not just trying to get lucky, that you're not trying to build up this simulated account so you can have a simulated house and a simulated Ferrari. Because what happens is when you practice aggressively, when you practice outside of the rules, when you're taking chances, you're teaching your brain to take those chances. You're creating muscle memory, and it typically sets you up for long-term failure. We're going to simplify. We're going to talk about that high probability trend trade. We're going to talk about what's called a medium probability trend trade. So a high probability, everything agrees. Medium probability, what happens is almost everything agrees, but there's going to be an issue. Your ability to read charts will identify that issue. These are managed a little more assertively. Once again, your ability to read charts is going to allow you to manage them assertively. You're going to be able to recognize problems. You're going to be able to get to a zero loss. But the key is you really have to make sure that you understand what it looks like. The easiest way to understand what something looks like, to make it effortless, is to go back and look at these pictures when there's nothing going on. Click on a picture and say, all right, this is the perfect trend trade. What's it look like? Well, I notice momentum and there's nothing in the way, and I see where he entered, and man, there's all these great opportunities here. So when I'm looking for a high probability trend trade short, my chart should look like this. And that's kind of the goal, is to get you to the point to where you can really just pick these trades out and not hesitate and not overthink it, right? Keep it simple. So we're going to use the two charts, large chart, small chart, and we're going to focus on the three rules, guys. And the three rules start with strong triggers. And understanding strong triggers, recognizing strong triggers, goes back to understanding that trend. If the background is green, the market is going up. And the easiest way to recognize strong triggers is both your small triggers, good morning, Kenan, both your small triggers and your large triggers, solid lines, dashed lines, need to be green. All the colors should match. And when the small triggers break above the large triggers, when there's space created between the two, this is what we call a strong trigger look. And strong triggers look pretty much the same both directions, just inverted. When the background is red, small's below the large, space created. It's that space between the large and the small, guys, that lets us know that the odds are favorable for the market to continue up. It lets us know that the odds are favorable for the market to continue down. And when you have what we call odds favorable momentum, this is the best of the best time to buy Fibonacci support on a smaller, faster chart in that uptrend, or sell Fibonacci resistance on that smaller, faster chart in an uptrend. And on your large chart, that slow chart, that freight train that's just ambling down the track kind of thing, you're going to see a tail. You're going to see a wick. This is that broad stroke of a brush, but on that smaller chart, it's a pushback and it's a bounce. And you're going to be able to pinpoint, really within your first 30 days, I think, probably sooner if you go through the study process, you're going to be able to pinpoint exactly where these wicks or these tails are most likely to form using that smaller, faster chart. So for the brand new user, odds favorable momentum, guys, it is the best of the best look. It's the one that lets me know that a market has the potential to continue in the direction. So we're going to turn this into a screencast lesson as well, or a capture software lesson. I'm going to take a picture of my S&P large chart. I'm just going to click on that capture button. I'm going to click again, and it's going to give me the option to take a picture. Once I do that, it's going to give me the image preview. This is how you and I are going to have a conversation every day, guys, is you're going to use this chart. So what you're going to be able to do is use these arrows, these callouts, these shapes, and they're all click and drag. So if I left click and drag down, I can get an arrow. And if I left click and drag down, I can get a box. So if I left click and drag down, I can create a text box. Make sure that your cursor is blinking in there. If it's not blinking, if you click somewhere else and it goes away, you're going to have to double click. But guys, this is where you're going to give me the whys. This is where you're going to tell me what you see. So for example here, you're going to say that the smalls are above the large. You're going to say that this is odds favorable momentum. You're going to say that this is rule number 1, strong triggers, and you're going to say that I have the advantage of momentum. You're going to go through this process, not only identifying the look, why it's the look, what it means to you as a trader. Once you have that, you can hit the copy button down here in the bottom right. Come over to the live chat room, drop it in, and say, hey, Mark, I want to make sure that I'm identifying strong triggers correctly. I know that this is the first rule. I know this is important. Did I get it right? And you'll get the feedback. I'll say, absolutely, those are strong triggers. This is the advantage of momentum. And man, when you have these strong triggers, this is the best of the best time to look for a pullback on a smaller, faster chart to pinpoint where this tail is most likely to form. And that feedback is going to help create the recognition. And guys, look at this. There's strong triggers. There's strong triggers. There's one of those tails. There's strong triggers again. And the market continues to push. You can also hit that upload button. And it's going to upload the media to screencast. It's going to give you something in the cloud. We're going to use this. We're going to copy that link. You could drop that link in the room if you want. That's fine. We'll take a look at it. But this is where I'm going to go back to my 101 tab. This is where I'm going to right click and I'm going to drop that link in there and I'm going to say this is strong triggers. And guys, I'm already 26 pictures into strong triggers, so you've got this. Make sure you go through and study these. And capture software, guys, this is how we have a conversation. Capture software is how you and I are going to get you comfortable with everything that you're seeing. Is everybody good with strong triggers? I like to ask a lot, guys. Are you okay with strong triggers? Smalls above the large, smalls below the large. This is the best of the best, guys. Strong triggers pushes a market. Strong triggers can break those key areas. Strong triggers will even cover the mistakes that new users typically make. And then once you understand strength, well, you understand that strength doesn't last forever. And this is kind of the life cycle of momentum, guys. Up here is odds favorable, best of the best. Let's pinpoint where that tail is most likely to form. Brand new users, this is your look. But with both triggers down, when one of the small triggers is inside of the large triggers, this is the first sign that momentum is slowing. You can see the small triggers working their way in. Short trades can still be taken, but you're going to have to be a little bit of a chart reader. You're going to have to make sure that the other charts agree. And then when the small triggers work inside of the large triggers, guys, you have a weakening or a slowing of the trend. Everything is visual, right? Strength, weakening, holy crap, it's weak. And anything can happen is a term that you're going to hear in the room all the time, guys. Hey, Casimir93, welcome to the room. Weak triggers mean anything can happen. Anything can happen means that it may retrace higher, it may reverse, it might still go down. If you're going to take short trades with this look, you have to be aggressive. They have to be managed well. And being a chart reader is what allows you to do that. So for the brand new user, this is your look. You'll work your way into this one. Maybe you'll end up with this one. And these weak triggers, when they reach areas, and this is our segue to rule number 2, this is when these areas are more likely to hold. This is when these areas may create a big untradeable bounce. And that's what rule number 2 is, guys. Rule number 2 is termination conditions. And termination conditions may stop the market. Termination conditions may create that untradeable bounce. Termination conditions are a big red flag saying no more trades into this area. Termination conditions are where these guys make decision. And you know about them long before you get to them, guys. you're going to see these lines on a large chart, and you're going to say to yourself, man, these people that move the markets, these ladies and gentlemen that push and create trends and establish momentum, well, they might exit at these areas. They might take a leave at these lines. They may fight one another when they reach these areas. So potential termination conditions are nothing more than lines on the large chart. We're going to look for divergence highs and divergence lows. Magenta dashed line coming from a pivot that's lost momentum. A magenta cyan line, which is just a fancy way of saying light blue. From a low pivot, you're going to look for red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones, and sometimes the mid-band. And ultimately, guys, we're going to use the trigger lines. The same trigger lines that establish momentum are going to let us know if these areas are likely to stop the market. That's your termination. Have the potential to break. That's going to be your medium probability scenario. Or have broken, and everything is wide open to get you to the next area. And it's a really simple recipe to understand. It begins with price reaching the area. Price reaching the area sets off the decision-making process. And when price reaches an area, in this case support, all you have to do is ask yourself, where are my trigger lines? And if your trigger lines remain above support, no more short trades. That's it. It's really that simple. Price reaches the area, the decision-making is set off. If the triggers are above, pump the brakes. It's okay. You don't know what the reaction's going to be. You don't know if the sellers are going to push through. You don't know if the buyers are going to try to take over. And you don't know if they're both just going to sit there and fight for the next hour. So if price reaches, triggers don't break, sit on your hands. And then when is the path clear? When the small triggers and the large triggers, both lines of both, get through an area. In this case, they happen to break through support. Whoops, that's the wrong one. And small and large get below, the area is considered broken. And it has nothing to do with the color of the fib, guys. It has everything to do with trigger location. Small and large break the area. Support is now broken. It becomes resistance. You have odds favorable momentum. And on that most current bar, you guys are pinpointing that tail right where the market is most likely to continue and riding that wave of momentum all the way down to Fibonacci support. So there's three options. There is price reaches Fibonacci resistance, 69.80. My small and my large triggers are both below the area. Therefore, I'm not taking any trades into this area. The area is not a clear path. It's not broken. All the momentum in the market, my small triggers absolutely smash through the area. Look for 3 to 4 points of push. Odds favorable momentum, but my large triggers are lagging behind, which means that 69.80 has the potential to break, but it's not a clear path. Rule number 2 isn't met. And then once my small and my large triggers get to the other side of resistance, resistance is considered broken. The path is now clear until I reach the next area. There's one of those tails with odds favorable momentum. Brand new users, let it be easy. Let it be broken. Let it be clear. Eventually, your ability to read charts will take you to that next level. And if you go back to the live market, and I'm going to do this right now, large chart again, you're going to see some pretty cool stuff. You're going to see a resistance that stops the market cold. You're going to see yellow one-to-ones that creates an untradeable bounce. You're going to see how support is the bounce point for continuation up. You're going to see how rule number 2 can identify a consolidating market, waiting for breakouts. The beginning of the move down starts at resistance. Divergence lows create a bounce up. So going back and really studying this look and looking on the large chart, you've got 10 days worth of history on your large charts. Go back and look at all 10 days. Go back and say, man, look how often the market stops in its tracks when it reaches an area and the triggers don't break. Or look at how momentum gives these areas the potential to break. And there's one of those tails, one of those potential entries. But I also want you to recognize what I think is one of the most important things is that rule number 2 very often is going to keep you out of trouble. Rule number 2 is going to remind you that 90% of your day is spent reading indicators. And I'm going to show you how that works. Odds favorable momentum. The market is screaming. Everything is going down. And really, maybe you're in a short trade, or maybe you have a little remorse that there wasn't a short trade to be had. That momentum absolutely smashes through Fibonacci support. Everything is going down, and there just was an opportunity to take. It reaches these yellow 1-to-1s, and some of you are going, I didn't make a penny on the way down. I'm going to trade into this area where the triggers are above, and it doesn't work out. You're stopped out almost instantly, a big untradeable bounce. And this bounce goes all the way to resistance, and all the triggers remain below, and you're like, man, I can't go short, I can't go long. And you notice that your trigger lines don't match each other, and they don't match the background. You're like, I don't have momentum. I don't have a clear path. The market is just bouncing back and forth, and there's nothing for me to do. And guys, this is your 90%. This is where doing absolutely nothing when there's nothing to do pays huge dividends. And it's not uncommon to see people that are a little antsy, that don't want to wait, lose 500, right? Lose 1,000. Get rid of $1,500 from their accounts, blow out, get angry. When rule number 2, the whole time, rule number 1, the whole time was just telling you, sit on your hands and do nothing. Eventually, if you allow it to, you end up with momentum. The smalls are outside of the large. And you'll notice that both the small and the large get above resistance, and it's acting as support. And guys, there's one of those tails with the rules met. This is the entry for your highest probability trend trade. This is the trade that typically wins 70-80% of the time. This is the trade that creates confidence through the memory of success, guys. And this is the trade, this particular trade, was about a $450 trade. And that feels good, guys. That's a lot of confidence. But if you lost 500 chasing trades that didn't exist, you're still down 50 bucks. You're still down 550 bucks. You're still down $950. And all of your amazing analysis goes to waste because it's making up for the trades that you shouldn't take. So termination conditions, guys, they're going to use lines on the large chart. Termination conditions are where the key players in the market are reacting, whether it is support, resistance. These lines can be used for targets. These lines can be used to keep us out of the next trade. Is everybody good with that? And I always ask that. Lines on the large chart. Are you guys okay with the idea that this is where termination conditions happen, guys? This is where it's okay to be patient, where it's okay to say to yourself, man, I just don't have the advantage. Cool. Sometimes your large chart doesn't make it to support or resistance. Sometimes it has a clear path. Sometimes it has a clear path and momentum. I'm going to give you guys one more termination condition here. And this termination condition is going to be the only small chart termination condition. The only time where I'm going to say on a small chart, I do not have a clear path and my rules aren't met for a high probability trend trade. And it's going to use the idea of divergence, guys. Divergence. We all love to overthink divergence. Divergence is nothing more than a loss of momentum. Divergence means that when, we're going to use some arrows to show this, that when price came down and went back up, right? Price comes down, goes back up. This is what we call a pivot. And a pivot is just a little change of direction in the market. When the market goes up and comes back down, there's a pivot. What divergence means is that at this pivot, momentum didn't follow. Yellow represents momentum. Momentum is lagging behind. Momentum can't keep up with price. And it's going to print a negative number. And I'm going to tell you right now, the negative number means squat, guys. It doesn't mean anything. It's just a byproduct of the calculation. There's going to be a negative number and a cyan line from a low, and then a negative number and a magenta line from a high. This loss of momentum, when you see it 3 times, no matter what the time frame, is a termination condition. It may reverse the market. These 3 divergences become even more powerful when your small triggers work their way inside of the large triggers. It's the exact same lesson from rule number 1. Smalls outside of the large means odds favorable momentum. Smalls inside of large means anything can happen. So now you have 3 losses of momentum and you have weak triggers. And it becomes more powerful still, guys, when that 3rd divergence is higher than the 2nd from a low or lower than the 2nd from a high. You're going to see this on that smaller, faster chart before you ever see it on that larger chart. And this look at a low or this look at a high not only says don't take that next trade, but it's going to help you see when that large chart may be changing direction and it's just too slow to give you that information. So This is my only termination condition on a smaller, faster chart. You'll see it on every time frame. If you see it on a higher time frame, it's even more likely the market's going to reverse and push the other direction. So as of now, we have momentum. We have a clear path. Rules 1 and 2 are met on the large chart. Guys, it's time to go to the small chart. It's time to let the small crowd do their thing. The large crowd says up, green background. The large chart says odds favorable momentum. There's that separation between the small and the large, and the large chart has absolutely nothing in its way. This is where the small crowd comes in. This is where these fighters come in and they say, you know what, I have just enough money. I'm going to mess with you guys. And they create what we call a pullback. It's just a small retracement counter to everything over here. This pullback is what gives us the magic of rule number 3. Rule number 3 says, you're going to use a limit order. You're literally going to call your shots, guys. You're going to know exactly where the market is likely to continue, and you're going to have an order waiting there. You're going to use a limit order to buy or sell a pullback, that little shove from the small crew, and you're going to do it at an area. So large chart lines may have been problematic. Small chart lines give us something to bounce off of. But the thing is we want those areas to be inside. For the brand new user, what we call favorable large triggers. For the more established user, we'll just say triggers. And I'm going to show you the difference between the two. On your small chart, there's 2 sets of large triggers, is the easiest way to say it. There are the ones that are native to the chart, and they tend to be smooth, and these are the ones that you'll use to establish momentum. And then there's the synthetic triggers, these more stepped triggers, and they are nothing more than the large triggers from the large chart. We superimpose them onto the small chart because there is a huge advantage of having those triggers trending together, one on top of the other. Trigger lines are moving averages, and price loves to return to a moving average. It loves to snap back and come to those trigger lines. When you put a couple areas inside of there, it gives it something to bounce off of. So favorable large triggers means that your large and synthetic are one on top of the other, 2 snakes riding piggyback. This is your best of the best look, new users. This is where it's easiest. This is where there's going to be the least amount of risk. And it's the absolute effortless pinpointing where the market is likely to continue. Sometimes, as trends slow, as change happens, you'll see the large and the synthetic begin to separate or split. You're going to hear me say split triggers in the room a lot. When they do, essentially you've created 2 correction points. Price may correct to the large triggers, price may correct to the synthetic triggers. The reality is we don't know. Hey, good morning, JW. And it increases your risk, and it decreases the accuracy. As you grow with the software, as you begin to get your reps, as you begin to understand a couple patterns that repeat themselves, you'll know when it's okay to take a trade with these split triggers, or you'll wait for a little confirmation. But for the brand new users, favorable large triggers is the best of the best. And then we're going to get into 2 snakes riding piggyback. I like it, John. We're going to use that 2 chart process, guys. We're going to pinpoint exactly where the market is most likely to continue. But everything starts on the large chart. Large chart leads the way, guys. And the large chart, and I hope everyone can see it, has strong triggers. And the large chart has the small and the large triggers above resistance. It's now behaving as support. The path is clear. And there's a circle, well, a square, right around the tail. And this is where we're going to put it together, guys. We don't trade tails. We don't wait for these tails to form. The top of the bar, the most current bar, and what we're doing is we're learning to study right now. The very top of the most current bar is going to be the beginning of your pullback. And in a perfect world, when everything works out, guys, that tail, that wick, is going to be areas of support inside a favorable large trigger. So we're not waiting for the tail to form. What we're doing is we're watching our small chart when the rules are met, and the first thing we're going to do is wait for a reversal bar. A reversal bar signals the beginning of the pullback. A reversal bar is not your entry. It says, let's put the wheels in motion. Let's start looking for the best of the best spots. So when the reversal bar prints, I start looking for my favorable large triggers, for the large, for the synthetic. They should be overlapping, one on top of the other. And then once I've identified my trigger lines, Well, now I have to find, sorry about that, those areas within. I have to find fibs, mid-bands, yellow one-to-ones. When price reaches my trigger lines, this is not my entry. Trigger lines are like clouds. I don't expect them to create a bounce. Areas inside of trigger lines are like a brick wall, and we're just throwing a tennis ball as hard as we can. I don't expect it to ricochet off of nothing. I need something solid for it to bounce off of. So we're going to create what we call the window of opportunity, the woo, if you're a Ric Flair fan. And that window of opportunity is going to extend from the highest point of support, fibs, mid-bands, yellow one-to-ones, to the lowest point of support, fibs, mid-bands, yellow one-to-ones. It doesn't matter which it is. We don't rank it. Lines inside of triggers give us a bounce point. So you're going to draw a little box from the highest point to the lowest point inside of favorable large triggers. This is where the market is most likely to continue. This is where we anticipate a bounce. I'm in the books, finally, right, Paul? I'm a somebody. You're going to activate your limit order right at the top of the window for a long trade. And why are we at the top of the window for a long trade? Because your large chart is screaming to the upside with absolutely nothing in the way, and we just don't expect the small crowd to get a lot of work done, not against this level of force. So your entry is a limit order just above that highest point, and you're just going to wait. And it's either going to hit you or it's not. And for a short trade, it's the exact same thing. Everything begins with a reversal bar. The reversal bar starts the pullback. The entry is not the reversal bar. This is just setting everything in motion. Where are my triggers? Red box. Where are the areas inside? And guys, this is one of those magical moments where there is one line inside of favorable large triggers. There is one point where we expect this market to bounce. Your limit order goes just below it. And this is your entry for the highest probability trend trade. And you're going to have to train your brain that these areas outside of trigger lines are not the best of the best. These are not the points where we expect the bounce, because we expect price to correct to triggers. We expect price to bounce off the areas inside of triggers. So you're going to train yourself to ignore these lines above the triggers. You're going to train yourself to ignore these lines below the triggers. And guys, I want you to take 30 days focused on the best of the best. 30 days being able to identify the absolute highest probability trade entry. And everything starts with a large chart. Rules met, strong triggers, clear path. Large chart says we want this market to go down, dare somebody to fight us. So step one is waiting for the reversal bar. And once you get this reversal bar, you're going to set things in motion, guys. You're going to identify your trigger lines. Are they wide? Are they angled in the direction of the trend? Are they overlapping? And once you find your trigger lines, you're going to say, what are the areas inside? I'm looking for fibs. I'm looking for mid bands. I'm looking for yellow one-to-ones. But they have to be inside of the triggers. I'm going to create a window of opportunity, that point where the market is most likely to bounce. And once I identify my window, the only thing left for me to do is just activate a limit order. That's what the yellow line is right here. I'm activating a limit order right at that lowest point. And I'm saying to myself, I sure hope the small crowd gets there. I've done everything that I can do at this point. I have insisted on momentum. I have demanded a clear path, and I've pinpointed my entry area. And that small crowd is either going to get you or it's not. But the cool thing is that if they get there, if they give you that push, guys, you're in the market where the market is most likely to continue. You have the advantage of odds favorable momentum of a market that's likely to continue to push down. There's nothing in the way to create any bounces, and you've entered where the market is most likely to continue. Guys, this is your best of the best. Give me 30 days of identifying this entry. Give me 30 days of picking out this window, and it's going to pay dividends that they're insurmountable, right? Because now you understand momentum, and now you understand a clear path, and now you understand entry points. And once you understand entry points, you understand where the market shouldn't go. Once you understand where the market is likely to go, you understand where it shouldn't go. And this is going to be your first stop placement. This is going to be generally 4 or 5 ticks above that window of opportunity, above those trigger lines. And you're going to say to yourself, if the small crowd pushes past my window, I don't want to be in that trade anymore. I no longer have that edge. I don't have the advantage of the entry area. I'm just going to exit. I'm going to take my hickey and I'm going to walk away. And you have to remind yourself as a brand new user that anything that wins 70 to 80% of the time it's mathematically obligated to lose 20 to 30% of the time, guys. This is a cost of doing business. This is nothing more than allowing the market to be wrong. Um, and these stops are going to reduce losses dramatically, guys. Having momentum is the first step in management. Having a clear path is the second step in management. Getting in where the market is most likely to continue is a third step in management. All those advantages are designed to reduce risk. And then this is the final one where you just say, hey, if it goes beyond the good stuff, I don't want to be in it. And then with all those advantages, more often than not, you're going to get a bar in the direction of your trade, and you're going to reduce risk even more, a couple ticks above, a couple ticks below. And it's not uncommon or unusual at all to see you guys post in the room taking a rules met, perfect high probability trend trade, using that reversal bar, reducing risk dramatically, and only losing $30, $40, $50 on a trade rather than saying, man, I sure hope it goes up. I sure wish it would go up, and getting stopped out for $200 to $300. So odds favorable momentum, guys, clear path. Pinpointing where the market is most likely to continue. This is setting things off. This is getting you exactly where you want to be as a brand new user. This is getting you to where you can read your indicators. And just for grins, we'll circle this one right here. And I'm going to minimize this chart. I'm going to go back to that tail. That's just the one that stood out to me. And I'm going to backpedal on my small chart until I see that circle. And what we're doing is we're learning to study. We don't trade the tails. We trade the pullbacks to support right there at those triggers. Notice how the two line up. Your job is to pull out your capture software, click that big red button. Don't just hover over one chart. Make sure that we get two charts worth of information. Click and drag from the upper left all the way to the bottom right, making sure that we get timestamps, making sure that you get the prices, and then snapping that picture. And when you snap that picture, you're going to say things like odds favorable momentum, right? You're going to say, not troggers, we're not looking at the troggers, guys. Triggers breaking area with strength. And you're going to say something clever like pull back to area inside of favorable large triggers. This is my trade. This is what I want to do. And once you take your annotations, hit that copy button, drop it in the room. Say, hey, Mark, I want to make sure that I did this right. I want to make sure that I'm not messing up these great lessons. That is strength, right? And this does have the potential to break. And that's the mid-band inside of those triggers. That's my trade, isn't it? And I'm going to be like, heck yeah, great job. Upload that thing to Screencast, right? Copy that link. Go to your spreadsheet and say, man, oh man, this is my high probability trend trade. This is the trade that gives me the highest chance of success. This is actually a 50-50 trade, which is that second trade, that potential to break trade. But guys, get that into your spreadsheet. Get it into the classroom. Get that feedback on it. And take this afternoon and just keep scrolling and look for your rules to be met. Look for odds favorable, right? Look for one of those tails. Maybe even in the beginning, don't even worry about the clear path yet. Let's start building trust and momentum. And what you'll find is that this is a pattern that repeats itself all the time, guys. This is a pattern that gives you the highest chance of success. And this is your focus for 30 days. To be able to recognize this in the moment, look at that, 3 divergences in the same price range. And it pushed that market up. And I love rules. To be able to really recognize this, to be able to check this out and get it the best of the best, you have to pinpoint a couple looks, right? You've got to understand odds favorable momentum. You've got to know what strong and weak triggers look like. You've got to know what a termination condition looks like. You've got to know what a clear path looks like. So this is the first of about 5 documents I'm about to drop in the room, guys. This is your 101. Chart reading 101. In order to get to where you want to be, you've got to recognize some looks and patterns quickly because you want to just commit them to memory and then it becomes easy. So take 25 pictures each, guys. Strong triggers, weak triggers, clear path, termination conditions, 50-50 look like everything. And don't just take the picture. Do me a favor. Take a picture, annotate the whys, annotate why it's strong triggers. Talk about what it means to you. Talk about what's the formula for finding that termination condition. Take these individual pieces, identify them, draw the pictures, show why this is what it is, what it means to you, how it fits into your trading plan, and take those pictures and start filling up this 101 section, guys. I've given you a huge head start. But if you take these pictures, if you annotate these charts, if you learn to piece these individual things together to create a trade, what you're going to do is you're going to be able to pick apart almost instantly how to catch these trades, what it looks like, what the advantages look like. And this is really the first thing, guys. This is the first step into confidence building. This is the first step into understanding what it is that you're looking for and how it is you're going to find it. And if you go through this, I haven't had anyone do this yet and not turn out to be a better chart reader. The next thing you're going to need to do is maybe have a way to police yourself as you take these pictures. This is a high probability trend trade checklist. This is a checklist that shows you exactly what it means to have a termination that reverses the market. This is a checklist for the entry that shows you odds favorable momentum, that shows you those anything can happen triggers, that talks about terminations, potentials to break, and clear path, and that identifies the window of opportunity. Use this one as your cheat sheet as you go through and do that chart reading 101, and then here's the same version without the pictures. This one can be printed out, it can be put on your desktop. You can police yourself every time you take a trade, and you can say, did I have a good top or bottom, a termination that reversed the market? Was there odds favorable momentum? Were my termination conditions false? Did I have an area inside of favorable large triggers? And if the answer is yes all the way down, guys, I've never had anybody in the history of this checklist do worse than 70%. This is your path to building confidence, to having the ability to be profitable while you become a chart reader, guys. So that's where the final document comes in right here. This is the KISS plan, the Keep It Simple Sunshine Plan, and I just put all 4 in the room for you. This is a stepping stone. I gotta wet my whistle for this one. This is a stepping stone in your learning journey. This is a path from your foundation, guys, and it's designed to optimize your chances of success with the high probability trend trade, with a 50-50 trade, that area with the potential to break. But it's going to be through simulation, through study, through feedback, continuous practice, that you're going to be empowered to create a plan that is tailored to your personal goals based on your ability to read your indicators, which is an AI-generated fancy way of saying, guys, when you can read your charts, you're going to see a million opportunities. You're going to see so many opportunities in the market. But your simple plan for consistency as a brand new user, the easiest way to get to where you want to be, never fight the large chart. Never fight the large crowd. Don't jump in front of that freight train, guys. And this was put together by my brother a while ago. It's a tongue-in-cheek book, How to Commit Financial Suicide, One Easy Step. And chapter 1 is they're trading against strong triggers. They're fighting momentum on that large chart. Chapter 2 is they're trading in determination conditions. He put this together because in 27, 28 years of teaching people to trade the markets, these are probably the 2 most common problems. Just believing that your opinion is going to outweigh all the forces of the market. So commit to that and then define your entry. Define where it is that you're going to get in, that best of the best spot, guys. And there's the checklist again. I've included pictures for your trading plan so you know exactly what it looks like. And defining that entry is really the first step in management. So once you get in, you have to manage. You've got to do something with that unbelievable entry with all those advantages. And what we found throughout the history of teaching people to trade, is that the more mechanical your entries are, the more mechanical your management is as a brand new user, the more if-then, the easier it is to get to where you want to be. That simplicity really yields results. So your mechanical management beginner plan, guys, the first off, the best of the best, the easiest, is 100% dependent on getting in where the market is most likely to continue. Stops and targets provided by Nexgen are 12 tick, 24 top tick scenarios. If you are trading the S&P, if you're trading crude oil, your default stop loss is 12 ticks, but 12 ticks is only designed to give you reaction time. 12 ticks in this particular trade is up here, but it's still inside the window of opportunity. So your initial stop goes where the market should. Your initial stop is there, and there's only one of two things that's going to happen, guys. It's either going to hit your stop, you will be stopped out. It's a normal part of a positive equity curve. It's okay as long as the execution was there, or it's going to give you that reversal bar in the direction of your trade. Once you get that reversal bar, if the reversal bar prints, then I will move my stop. 2 ticks above it, or a long trade, 2 ticks below it. And there's nothing for me to do. I've got to sit on my hands, right? Hands in the air. It's either going to hit that stop, it's going to take a smaller loss, or it's going to move on to my first target. And for you guys on the KISS plan, your first target's only $100 in the distance, guys. It's only $100 away. And your first contract comes off at that first $100. Once that's off, that's your money. This is where confidence is built, guys. This is success. Confidence comes from the memory of success. And you're also going to put your stop at break even. And that may not be the best stop, but as a brand new user, it takes all the risk off this trade. You've already been paid, you've got nothing to lose, and it's going to make it easier for you to hold for the second target. The second target is only $100 from the first, which makes it a $200 target, which means that if you hit it with all that momentum, with that clear path, with that beautiful entry, with that reduced risk, guys, this is a $300 trade. And some of you believe that you need $1 million to do great things on the market. Yeah, I've got to make $10,000 a day or I'm never going to be successful. Guys, $300 a day is a $1,500 week, guys, and that's a $6,000 month. And that's a $72,000 year, you know, adjustments here and there for holidays. But guys, $72,000 a year, right? What if you turn it into a 4-lot with the exact same management and it turns into $144,000? And you continue that compounding as your confidence grows. Everything stems from keeping it easy, keeping it simple, keeping it focused in the beginning. Learn to read your indicators, learn to recognize advantages, learn how to get paid. Because that is the goal of what we do, guys. The goal is to get paid. And then your management, just like your trading plan, you will craft a plan tailored to your goals based on your ability reading the indicators. You're going to understand when it's okay to hold for bigger moves, when you should get out sooner. And all of that comes from the repetition, from the pictures, from the study, from the feedback. And you'll get to a point to where you might say, with odds favorable momentum, with an absolute clear path, I'm still going to get paid, I'm still going to drop my risk, but man, this market says that it's most likely to go down to that fib. What a great place to get paid. What an awesome spot to be able to hold, to turn that $300 trade into a $700-800 trade, and then just call it a day. Go surfing, go play golf, go do something, right? Walk your dog. Take advantage of all the wonderful things that you've done, guys. And that's my first hour, and it looks like we made it into the hour, guys. Be okay with not being in every move. Every dollar isn't your dollar. Every swing isn't your swing. Every opportunity isn't your opportunity. But if you wait for the best of the best, if you give yourself a statistical advantage each and every time you enter the market, then you become patient and you say that even with momentum, I don't have a clear path yet. And my small chart confirms it with multiple divergences. And it's all right if there's nothing for me to do. It's okay if I'm not in a trade. It costs absolutely nothing to remain flat. And you may say that with strong triggers, right? I'll let this one bounce off with the potential to break. But as I start getting changes, when my large triggers start going the wrong way, when my triggers don't match and they're no longer favorable, maybe I'll avoid this last trade. Maybe I won't take that final long. But it's okay, because I already got paid right up to the very top there. So are there any questions about the high probability trend trade? Are there any questions about momentum? Are there any questions about termination conditions? Are there any questions about recognizing that window of opportunity when the conditions are right? Once again, is this the one that we did earlier, or did we do it on the S&P? What did this one look like? I love scrolling back and doing this, guys. It just builds confidence. Son of a gun. Right to a mid-band, right inside of favorable large triggers, guys. Everything that we do is patterns. Everything that we do is patterns. You can take, and I'm going to show you this right now. This is pretty cool, I think. I hope you like it as much as I do. I'm going to go to the trade section, trading guide. I'm going to go to tops and bottoms, and I'm going to show you a picture that's right here in the user guide where price reached resistance, pulled back to support, and weak triggers at resistance is where that market reversed. And I'm going to minimize it, and I'm going to scroll back on crude oil. And I'm going to take that same picture where price reached resistance and pushed all the way back to support, and then weaker triggers at resistance is what reversed the market. This is from today, 5:34 a.m. The picture in the user guide is from 2021. Patterns repeat themselves, guys, all day long. Learn the patterns, become a chart reader, and then being a day trader will become effortless. So, all right. Directly to Fibonacci support, that's your 10 o'clock fib update. You can see it on the small chart as well. And we're right there, so let's just pause, let's wait. I'm going to take a break, guys. I'm going to turn off my camera. I am going to take a break. I'll turn it back on in a minute. Go stretch your legs. Go do something. If you have a question, if you have a need, if you have a picture, drop it in the room. When I come back, we're going to start looking at the charts that you guys posted. We're going to start talking about advantages, and we're going to really just talk about each and everything that you've done. So I'll see you guys in 5 minutes. Go stretch your legs. All right, y'all, let's get back to it. Start up YouTube real quick. So I'm going to scroll to the top of the room. I realize I'm looking all over the place, everywhere with the camera. I'm going to go to the top of the room and we're going to start looking at the charts that you guys posted. We're going to talk about kind of what you dropped in the room, what you see. And I want to let you guys know that if you drop charts in to the room and they're from yesterday, that's okay. If class ends at noon, if it's 2 o'clock in the afternoon and you're like, man, hey Mark, I need a little feedback, drop it in there. Paul, your charts are struggling to load right now. So I'm going to close those out and try it again, see if we can get these to load up. Let me see if somebody else's load. And we'll see if it's Paul. It may be the service that you use isn't functional right now because screencast came right up for Ringa. So I'm going to move ahead to Ringa's and then we'll come back to yours. So Ringa dropped a trade in the room. And first and foremost, thank you for posting in the room, guys. Every time there's a... You couldn't load Paul's either. Yeah, Paul, it may be Tiny Take that's doing it. So Ringa, you have an awful lot of charts, and that's okay. I'm going to move it over to the 13.2 and your 5.1. And I know that you use more than that, but for the sake of what we do, I think that this works out pretty well. And if you look at Ringa's chart, guys, it's beautiful. He's got momentum. He's got a clear path. Everything on the large chart is perfect. Everything that we're looking for. And on a small chart, the one thing that I do like is you tried the short and it didn't work, and you didn't have the rules, Matt. That's okay. Caught you hiding one, but that's all right. Let's focus on this one. With odds favorable momentum, with a clear path, there's two things that Ringa's thinking. The first thing is, man, with all that momentum, it looks like it's going without me. Let me jump in. And this is a very common trade with you guys. That momentum trade, taking in, getting in with the momentum, and then getting out with the momentum. Well, one thing that's true is pretty much every failed momentum trade, when the large chart is saying go, 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 if it fails, if you lose momentum, this is where you have to have an expectation. You have to say to yourself, momentum is the reason for entry. How many bars are you going to let go against you before it's no longer a momentum trade? And then if the large chart still says go, it's a high probability trend trade. So Ringa, I hope you're with me on this one. I don't disagree with the trade. I think it's a good trade. You had all the momentum, everything was going, it looks good, the market's flying, and you're saying, you know what, I'm going to catch that last push. But the last push doesn't happen, and the retracement does. And this is where failed momentum trades typically become trend trades. And you'll notice that you got stopped out, Ringa, and this is the part that I really want you to notice, is you got stopped out really 2 ticks before your absolute best of the best, highest probability trend trade. And that stop out rattled you enough that you didn't get back into the highest probability trend trade until way down here. And I don't think that there's anything wrong with the trade. I think that if you're thinking in terms of big picture, if you're thinking in terms of this is my absolute best of the best look for a high probability trend trade, which means that if I enter the market here and it retraces, where shouldn't the market go? The market shouldn't go beyond areas inside of favorable large triggers. So your stop either has to be here where it's safe, add on to the position if you want to, or you've got to exit with that loss of momentum and get your head right to take that next trade. Then there was one more part of this trade that I wanted to show you, and that is this right here is the best of the best. This is your momentum trade, and this happens somewhere over here. With everything screaming down, with every chart agreeing with momentum, with everything saying that it's likely to go, when your small triggers break through this one-to-one area and the price pulls back, this is a 100% momentum trade as taught by Nexgen. And that is your opportunity to capitalize all the way down, exit with a loss of momentum, and then get back in right there for the high probability trend trade and finish the move. So um, great pictures, great trades. I like the looks. I think that a little thought on that one with momentum turning into a medium or a high probability trade is going to give you the opportunity to feel the courage to hold a little longer or to exit a little sooner and simply re-enter. Great stuff, Ringa. Thank you for posting that. I hope that all makes sense. Guys, if I ever go back and I look at your charts and you're like, I have no idea what he's talking about, make sure that you tell me. Or if you have a question about somebody else's charts, make sure that you ask. Get that picture in there. This is Ron. Ron does his best to give me heartburn. But really all he's doing is trading patterns. All Ron is doing is he's trading patterns. And I can tell you right now, and Ron will back me on this, everything that he does in the market is a byproduct of everything that he learned in the high probability trend trade. So his large chart says down, and his large chart says momentum, right? His large chart's even coming from a termination condition, and that's a pretty good look for a short trade. What Ron sees, and I'm going to go through hopefully the whole thought process on this one, is that this is one of those 50-50 trades. This is one of those times when the areas only have the potential to break. So it's not a clear path, and he says, wait a minute, that's not a clear path. And then over here on a smaller, faster chart, he says, well, I got a couple divergences, so I have a loss. I have two losses of momentum and not a clear path. This is a pattern that I know is probably going to push me up a little bit. And he's not hoping for a home run, and he's not looking to end his day on one trade, but what he's saying is that with two divergences on a 50-50 trade, it's probably going to get at least to the top of that window, to that reversal bar marker, and he's formulated a way through months of study and a lot of pictures to capitalize on it. So if you're the brand new user, this should be terrifying to you. This does everything that we say don't do when we blanket you with those very conservative rules. And this is an opportunity that Ron has found through his chart reading, and it's really cool to see it because it's one of those things where you start to realize that the longer you're with the software, the more you're going to see, that the more time you spend recognizing the easy patterns, the quicker you're going to get to the more difficult, to the lower probability but easily manageable trades. And guys, it would appear that just the pasted pictures aren't working. So I don't know how this is going to work with my camera, but I'm going to shut down Discord real quick. I'm going to kill it through my task manager, and I'm going to come right back. So usually you guys can hear me when I get over this way. Hopefully you can. I'm going to bounce back in real quick, and it should clear up my problem. Almost there. Nobody panic. Up comes the room. There I am. Nice to see you guys again. Let's get a screen up. And voila. Can everybody hear me? We're good? I hope. Awesome. So let me go back to Erla's picture here. I believe it was Erla. It sure was. And I should be able to open it, and there it is. And I think we saw this one yesterday, or maybe patterns repeat themselves. Opportunities Erla sees all the way down. And guys, I want you to see this momentum. The best of the best, the odds favorable, everything screaming to the upside. And Erla says, well, I'm not trading into resistance. That seems silly. And I'm not going to trade into these one-to-ones. How could I possibly do that? But I will trade just beyond them with this level of momentum. And as soon as the momentum stops, Erla, you take an exit, right? And then you try to take that same momentum trade, but you've already had a loss of momentum. It's already at one-to-ones. And this is the one that's less likely to work. This is the momentum trade that's failing, coming back down. And one of the things that you'll see here is this bad bottom creates a little indecision around the midband. And they just wanted to get back to support. So I love this momentum trade. And let's turn this into a momentum phase lesson. And we talk about this a lot. For you guys that love this jump in trade, I'm going to draw a line. Hey, Daryl, good to see you, man. Welcome to the room. I'm going to draw a line on the small triggers, guys. And let me know if you've seen, if you're good with this lesson. So when momentum is strong and bars are left of those green small triggers, guys, this is the momentum phase. This is when those jump-in trades have the highest chance of working. This is where those jump-in trades are the absolute best of the best. When everything is left of that green line. Once I get over here, I'm on the wrong side of that momentum phase. I'm on the dirty side, and these trades are less likely to work. So momentum phase and it carries up, momentum phase and it carries up, and look at this, momentum phase and it carries down. So when you can take these trades, if you're looking for these jump-in trades, and even right here on the momentum phase, the market continues up. This is a great opportunity for you to recognize when the advantage is present, when the advantage is gone. So early, great trading. I think that second loss is probably avoidable just with that momentum phase lesson, but absolutely beautiful trading. And then Jonathan, that is a very nice picture. I do like it. I think you posted in a little bit. You said for later. Remember to use those annotations. I'm not sure what we're looking at here. I mean, I know what we're looking at. I'm not sure how you're doing it. And then Ron, same thing. Erla made some money here when it pulled back and started back up. You use that same momentum phase to create opportunity. And you must have been walking the dog there because usually you have that one. Momentum for the win. If I had a nickel for every time I said momentum for the win, I'd have a sack of nickels, guys. And then we have, who was this? Kenan? Let's take a look at it. Let's blow this up a little bit. Rule number 1, favorable momentum. All right, so I'm going to do a little, and this is one of those times where I think lessons get a little mistaken. Kenan, are you with me in here? They disappeared? That's weird. I'm trying to line up your entries. So you entered at 86, right? You entered right at support. Right at support. I like it. So you're on the tail end of momentum. The path is clearing. The one thing that you didn't do here is we didn't wait for an entry. We didn't wait for a pullback, which is okay. I'm not sure how you got in at 86. Maybe there's a snapback there. Ken, was there a tail or something, some sort of little pullback to 86 to get you in there? Or are you in at 96? I'm having trouble seeing. Oh, hey, Iron, good to see you, man. And thank you. You're in at 86. So you let it break and take a little snapback. Is that right? With momentum and a clear path, you just traded the breakout right from the fib. Beautiful. Absolutely beautiful. This is more of a momentum style trade. And your stop is perfect. You're trading 14 lot. Not so bad. Nice job, Kenan. Good job getting in there. Still a little bit of momentum, taking a clear path, finding your entry and capitalizing. Well done. Little unorthodox. Mike, that's pretty cool, and I hope you don't mind. I'm going to read this out loud. Work's kept you away. That happens. It's a 4-letter word, guys. We don't care for work. But listening to the broadcast on YouTube at night when you get in, right? Taking advantage of the class, getting the lessons, seeing them, watching the rules. Guys, I'm telling you, it works a lot. And I love that you and your wife love the teaching. So tell her I said hello. And it's good to see you in class. Let's see some charts. Let's see if we can't get you guys where you need to be. And then Dawn. Sorry, I had that blown up. Let's take a look, Dawn. From a good top, absolutely. Odds favorable without question. Smalls outside of the large for sure. 5-1. Smalls aren't really outside of the large. And then here's the part that gets me. Don, are you in here? And guys, this is why posting in the room becomes so valuable. And there's got to be a level of truth in advertising. No divergence on the 5-1. So what you did is you wrote the rules perfectly from the KISS plan. You wrote the rules perfectly from the KISS plan. But there's a divergence, right? And it's a pivot stop out. And the smalls aren't outside. So what we're looking at here, Don, and I think this is a great lesson on how just a little adherence to rules in the beginning, you'll learn your rules enough to break them. And this is the KISS plan. This is, let's do it this way. Whoops, let's drop it down to 100. And I'm going to take your picture. And these are the same rules that you put. And you did a great job policing yourself, almost. Is it from a good top or bottom? Absolutely. That is such a great look, guys. In termination conditions that reverse the market create advantages. Smalls below the large, everything wide angled, 100%. But then we get a no. The smalls are still inside of the large. And no divergence, we get a second no. And Don, I know that there probably was an opportunity from here to there, which means that you were going, man, I just want to trade. I want to get in. I think everything lines up. I'm going to take a shot at this bad boy. And I want to say this a different way. Am I willing to risk my hard-earned money when 50% of my identifiable advantages are missing? And I think that this sort of language, talking in advantages, pays huge dividends, Don. And a little honesty down here on the divergences. Or are you saying that there was divergence? Because that's always a possibility too. But if you identify divergence, if you say, man, 50% of the good stuff is gone, maybe this isn't my trade. Maybe I need to be patient. It works out. But even if you didn't, and you said, you know what, I'm taking this trade. I like this trade. I love this look. Everything is good about it. That second divergence has got to be a giant red flag. And I think what happens is when that divergence is true right here, you're so hopeful of the win. You're so committed to the downside that you don't recognize it, that everything appears to have changed in the moment. Does that make sense, Don? Starting with advantages, and then if you make the decision, being willing to exit a trade. And guys, this is hard. It's hard to be in a trade and like willfully get out of a trade for a loss, to say, I know that I'm going to lose 2 points on this one. I'm just going to make them come get me up here. And one of the things that I noticed too, Don, is all of this resistance is inside of those synthetic triggers, which technically this stop is still inside of your window of opportunity. And I'm not sure what the market did from there, but they just scrambled. If you don't think decisions are made at fibs, guys, look at how the market, up, down, all of this indecision right at these key areas. And you'll learn to trust those a little more with a little more study, I think. I like the look. Good top, strong triggers, everything down. Your small chart just gave you a management opportunity that you didn't take. Good stuff. Thank you for that. And then Zorro, let's see what we did. Not a great top. Split triggers. Let me see what's what here. This is your 5-1. There's that momentum phase. Outstanding. And your large chart is a 50-50 trade. So can we do the same thing, Zorro, that we did on the last one? Are you with me in here? And this is so aggravating for new users, I think, when I do this. And I don't mean to aggravate you guys, I promise. But once again, if I put this checklist, so I put this high probability or this 50-50 trade checklist on here, you start to notice a few things. And you even put not a great top, right? So there's my first no. Odds favorable momentum, absolutely. Strong triggers on the small chart, that's a no as well. And divergence on the small chart. So we're 3-1 on taking the best of the best 50-50 trade here, Zorro. And what that says to me is that I'm just not going to bother. I'm not going to bother taking that entry. And I want to make sure that that wasn't your exit. And that was your exit. That wasn't your entry. So momentum in, there's got to be a point where a loss of momentum takes you out. That's a huge give back. And I don't tell you guys what to take and what not to do. But let's look at all of the evidence. Stranded sellers, divergence, split triggers, weak triggers, and a 50-50. There's a lot of reasons to jump ship on that one, on the third bar. And the third bar is the difference between 22 and, man, I can't see where that is, 24-ish, a couple points, couple $100 worth of profits you could have held on to there. I hope that makes sense. And then it's interesting that you took the long here and were willing to exit so rapidly, maybe because of that chart. Nope, there's target 2, the fib. I like it. It's beautiful trading. I just think a little management opportunity there, a little opportunity to keep just some extra in the bank. And then Gerard, you took the same trade, and this is a great lesson. So what we're going to say right now is understanding what kind of trade you're in creates expectations for management. And do you see how momentum is present, termination, I absolutely love it. The one thing that I'd love to see you talk about in this picture, Gerard, is the path. And there's a reason that all the rules come together. So if I'm annotating, if I'm looking, this is my talk through as I look at this trade. I say, man, that's a great top. That's a termination. No triggers through, reverse the market. That's momentum. I love momentum. Momentum can break areas. But what does my path look like? I have 1, 2, and really the divergence low. I have 3 areas I hope break. And 3 areas that I hope break. So I'm going to go through. I'll let the small chart be the tiebreaker. The large chart says that there's a lot of potential for things to go down, right? Between the termination condition, between the momentum, between all this stuff. And then I start looking and I go, man, I know 3 divergences can reverse a trend. I know that when my trigger lines are flat and lifeless, I don't really have momentum because momentum is that wide angled in the direction of the trend. And while I do have a mid-band, this trade is already riddled with some problems. You take your entry, right? Stop keeps you safe. Or did you get knocked out of that one? You may have gotten knocked out. Yeah, you got knocked out high tick, which is an appropriate stop if this is a higher probability trend trade. But you're starting to give away so many advantages. Your small chart is telling you that while there's the potential for this area to break, there's a good fight going on. There's losses of momentum. There's higher pushes. There's trigger lines changing. There's a lot going on that small chart that says this may not be a clean break. And the further you get into your chart reading, the easier that's going to become to catch in the moment. Gerard, does that make sense? Identify it as a maybe trade, as a medium probability trade, and then you'll start paying a little more attention to what's going on that small chart and decide if those advantages are present for you. It's a great look on the large chart. I'll go to bat for every one of you guys on the large chart. All right, Jonathan, looks good. Why? Why does it look good, right? Let's go through. Um, I like annotating y'all's charts sometimes when I think that there's an opportunity there. Looks good. And Jonathan's head says, and Jonathan, please correct me if I'm wrong. Looks good here is the equation of that is strong triggers. Momentum is awesome. Hey, Kenan, take care, man. Thank you for being here. Is that about right, Jonathan? Looks good means that the momentum is awesome. Like, man, I love that look. And the termination condition is solid. And life's looking pretty good right here. And then I love this. It's not a clear path. Not a clear path. And there's your resistance. Enter with an exit with a limit. So where did you enter? You entered at resistance right here? Nope, hold on. You entered up here at the top of the window with the losses of momentum. And then you were out at resistance. Am I reading that right? Two divergences pushes it to the highest point of the window of opportunity where you enter, you recognize the trouble spot, and you exit. I can't see your entries and exits. I want to make sure that I have this right. Because if that's the case, I love it. I love everything about it. You took a medium probability scenario. You let a loss of momentum suggest the highest point of the window of opportunity. And then you got out of trouble. What a cool thing. That's a great chart read, Jonathan. I hope that I'm reading it correctly. And then I'm going to show you guys a trick that'll help me out a little bit. Okay. You would have held until a third divergence, right? And then you would have said, that's a deal breaker. Iron Mike, I'll find you one. Termination, odds favorable, potential to break, right back to a mid-band. Did anybody take this long? Who's going to show me this long? Please, somebody show me this long. That's solid. And the gap theory. So, Mike, let's go take a look. Because we're out of pictures already, guys. If I go to the video section, I just want to take a look real quick. Yeah. All caps. I'm trying to think of the ones that I know. So I'm going to give you this one. And I think that this is probably a pretty good one. Nexgen market flow. Good stuff. All right, and guys, here's the good news is you no longer have to look at me. Bye-bye. John got all the recording that he need. Good stuff. Iron Mike, this is a good one right here. This just kind of covers everything. It's a great place to start. Can I give you my doom and gloom warning? Not really doom and gloom. I want to share something with you. Market flow, when the rules are true. This is the most important thing and the most ignored thing from new users. Is you've got to have a reason to look at market flow. Whether it's odds favorable, clear path, whether it's momentum on every chart, whether it's a great top or bottom. If you try to let market flow lead the way, if you try to take trades based on market flow and not what your higher time frames are telling you, the chances of you getting absolutely annihilated go up exponentially. So make sure that you're not letting market flow lead the way. And then one more thing on that same token. Where is it? There it is. My favorite picture for market flow. Seriously, don't stare at market flow. Trying to figure it out unless your dynamic Renko bar charts are telling you to take a trade. And then my 2 cents, just based off of my own personal experience. And I can tell you with my own trading, and I'm going to be real honest with you here. All of these dots don't mean anything to me. I don't read the bars on my market flow. I use market flow for two things, Mike. I use it for momentum, and every now and then I'll use it for a signal. So just, you'll notice that, and let's see if we can do 3 charts here. This is how I like to use it. Let me slide this over. Let me make my market flow chart bigger so that you can see. Brand new users, I don't think need it, but that's okay. Notice the circles on all 3. Does everybody see that I had odds favorable? That I had odds favorable? That I had odds favorable? Does everybody see that the market is up, that the market is up, that the market is up? I like using market flow. Oh, shit. Can you guys hear me still? Okay, cool. I wasn't sure if that microphone still worked when the camera was off. I got nervous for a second. Every chart agrees. For those of you that are brand new with me, this is when it's easy, guys. When every chart says up, when every chart says strong, when every chart says that it just disappeared on me, that's when it's the easiest. That's when trades come together and they happen and they're almost effortless is when that goes on. Sorry, I got bumped. So if you're going to use market flow, go through and use it for confirmation of momentum first as you learn these rules. And then from using it as a confirmation, then you'll begin to recognize some of the patterns that present themselves. And of course, always feel free to present it in the room. Always feel free to drop your market flow questions in the room. I'm happy to cover them, to talk about them, and to help any way that I can. And I don't think there's any market flow on here, to be honest with you. And that's perfect, Iron Mike. Then you are doing it exactly as it was intended. Great job. So that warning was for everybody else then. Let me see where we're at here. Those charts are loading. Got crude oil up. Still loading. And directly into a termination condition. Even with the momentum, guys, directly into the termination condition. And I want you to see something cool. Let's talk about patterns for a second. And let me draw a picture. And guys, I'm out of pictures. If I missed your picture for some reason, let me know. And Paul, I'm going to backtrack to yours too. This is what we call a weak top. Oh, Muser, are you meeting up with John? You know he's in Sarasota. And I'm pretty sure Chris T has hung out with him as well. You should reach out to him. Go grab a drink. He loves meeting clients. Make sure you reach out to him. Post some pictures. I think it's cool when you guys get to meet us. I think it's cooler when we get to meet you, to be honest. Have a safe trip. Guys, this is what we call a weak top. And this is just patterns. This is all we're talking about. This is a weak top. What's a weak top? A weak top means... Awesome, Paul. I'm going to go back. I think it was just a little hitch in the provider. So we're good. What does a weak top mean? Basically, it means that they didn't make it to their decision-making points. The way they made it to their decision-making point here that ramped the market up, they didn't get there. And when they didn't get there, they pushed all the way back to support, all the way back to a mid-band. And this is a pattern. Large triggers were a full bar away, which means that it was likely to close the gap. But this pattern, guys, when they can't make it, they love to finish the move. And this does a couple things for me. One is it makes this trend trade one that I never want to miss. But it makes this termination condition one that I definitely want to respect, because that may be where they were headed. And Ron, Man, I was hoping it was going to be a bike week. When everything says up with momentum, price clears the trouble spot, momentum phase of the triggers, Ron says, you know what? I can make a little money here. That's a small base hit. That's a good one. You knew exactly where it was headed. Nice trade, Ron. This trade, I'm going to tell you guys right now, this trade used to aggravate me. This trade used to scare the ever-loving snot out of me. And then once I studied it with a little bit of study, I love this trade. I'm known to take this trade every now and then. And Andy says, Mark, I know you're talking about it right as I post it, but let me show you how it can be executed. You recognize the potential termination, the odds favorable momentum. Because you were late to the party, you missed. You had to wait for confirmation, but you were able to get a piece. So Andy, you just get in on the bar. Nothing wrong with that. You get out at the first trouble, and then arbitrary stop. It's like they have cameras on you, right, Andy? It's like they said, man, where are the scared people going to put their stops? Probably in the middle of nowhere. Let's go hit it, and then we'll go up to the target. I wish I had $1 in the, well, I might, but I wish I had $1 in the bank for every time that's happened to me. For every time I said, you know what? I'm not willing to risk anything into trouble. And they come and low tick you and then run. So let's turn this one into a management. Family down for a visit. Nice, Ron. I got rid of the last of mine yesterday. We had a full house all weekend. Have fun, man. Enjoy family. And yeah, I want to see the bike week picks. So let's talk management. Andy, and there's nothing wrong with being aware, right? Nothing wrong with being aware. But let's talk about it. We had a term that reversed the market. You had odds favorable momentum. You had strong triggers. You had a solid entry. You had money in the bank. I used that one this week. And let's just look at your small chart. When you get knocked out, even your smalls are on the way up. And this is one of those times with this look, with this here, but I'm using that pivot. I'm holding tight until something like a divergence prints to push me lower. Does that make sense, Andy? And I think that if you just opened up, you don't have your head wrapped around management maybe the way that you wanted to. And I totally get that. Good stuff. 3 hours, Paul. Yeah, that's okay. Were you not in front of it? Or did you question everything? That's what I always like to know. Because I've watched you trade, and you usually don't miss this one. Switching screens. Okay. A little division of attention there. That'll do it. That's one of the reasons why I only trade one market, guys. When I trade one market. Because what happens is I start toggling back and forth, and when I do, if I miss something, then my trading becomes a little erratic. If I miss an entry, if I miss just really anything, right? I just get in like, oh my God, that was a trade, and I'm frantic instantly. I'll trade NASDAQ in the morning. Yep, they tend to work together. Last night I traded gold with Paul, had a good time. So Paul, you're just trying to momentum style the breakout, right? Odds favorable on the large chart, momentum phase, small triggers through. You take the pullback on the up-down pattern, virtually no risk to see if it goes. Guys, this is a great advantage of taking advantage of momentum, and I want you guys to see, and what I think the most important thing is, for you jump in guys, if you didn't make your money between here and there, this is where you have to be patient and trade from the area, and that's virtually no risk. I'll take 3 ticks of risk all day long. It's still dancing, isn't it? Rooting for you, Paul. Rooting for you. But I mean, you're risking nothing, right? Has anyone ever lost $45 or $37 and thought, man, that's the end of the world? I haven't, never have. Good stuff. Even last night I took a loser and it was pretty funny. Um, if you were watching Traders Chat last night, gold was moving amazing last night. It lost, and I took a trade and I got absolutely smoked on it in gold, just smoked. And usually I'm telling you guys, man, it's okay. It's a part of losing. It's a part of losing. And I got to thank Pineski. He goes, man, it's cool. It happens. And I was like, all right. The student has become the teacher, you know? And I think it's good to hear that every now and then. I think it's okay to hear that not every trade's going to work. And it's okay to be okay with the idea that when you have all the advantages and you still get run over, that you no longer, and you'll get to the point with trust, guys, that you no longer focus on that stop out, but rather you focus on all the advantages and you start talking to yourself and you're like, man, when I have momentum, when that path is clear, when my entry area is clearly defined, this is my trade. This is the one that wins more than it loses, and I don't worry about the outcome. The outcome is so far out of my control that it just doesn't matter. It doesn't matter what happens. What I have to focus on, and I'm going to go to this right here, is what I'm going to focus on is the execution. Did I follow my rules? Did I stick to my plan? When you stop expecting to win every trade, very often you find that you start winning more of your trades. And when you focus on the execution rather than the result, it's pretty crazy how the results just kind of show up. And for all of us, and I do not exclude myself from this, you set yourself up for failure when you take a loss if you believe you know what's going to happen, right? Paul said he lost that one. If Paul believed in his heart 100% that where on earth are my charts? If Paul said this trade is going to win, Paul is despondent right now. Paul is like, oh man, what do I do? What do I do? But if Paul said, hey, you know what? With 1, 2, 3, 4 areas not broken, I'm banking on momentum. I'm betting on momentum, but I understand that there's challenges. But my rules say enter here. They say put my stop here. And if it wins, that's outstanding. And if it doesn't win, that's okay. I'll wait for the next best setup. And that's exactly what he's doing, is he's waiting for the next best setup. So, good stuff. Guys, focus on the execution. It takes a lot of the stress out. What do I think about that entry? I think it's a momentum style entry. Jonathan, I think you should tell me why you took that entry. I think you should tell me what the conditions were on your large chart. I think you should tell me why you think this one provides a statistical advantage. And not for me, Jonathan, I know exactly what's going on your chart. The goal is that it's repeatable, right? The goal is that you can do the same thing, that you can take the same entry, that you can feel good about why you did it. So if you're like, I think this is a good entry because I saw Paul do it, that's a rough plan. But if you say, I had momentum, the small smash through, and I'm going to go long at a little snapback to support, that's rock solid, Jonathan. Does that make sense? So it's not for me. I know exactly why you did what you did. Can you take this look and make it repeatable? Can you find the exact same look and find, and prove that it wins more than it loses? It is. So are you going to remember, Jonathan? And you may be gifted and talented. I'm not. Are you going to remember tomorrow in the heat of battle exactly why you took this trade? And where is your stop, right? Where is your protective stop going to be? Include that. Is your stop going to be right here because I'm only willing to risk a couple ticks? Is your stop down here below the window of opportunity in case this turns into a high probability trend trade? And again, I'm totally cool with however you guys do this, but my number one goal for you guys in my classroom is being able to do the same thing over and over, being able to recognize advantages, to take the trade. So what's a quick stop? If this thing rockets down in 2 seconds and your stop was here, that's a quick stop, right? What's an appropriate stop? How far below this fib are you willing to let it go before you jump ship? Is it going to be divergence? Because divergence is a loss of momentum. Is it going to be 2 bars, 3 bars? Is it going to be below the midband? Guys, these are things that you have to think about if you're going to enter a trade, and things that you need to know before you ever sit down. Before you ever sit down to take a trade, guys. If you're going to be successful, if you're going to be consistent, and this is just history speaking, my experience, this isn't gospel truth, you have to know your rules for entry. And Jonathan, we're off of yours now, right? I'm not coming after you here, I promise. What are my rules for entry? What is it going to take to get me in? Is it repeatable? Can I identify it through pictures? Can I verify 100% that it wins more than it loses? And if so, that's how it becomes my rules. And then once you enter that trade, right on, Jonathan. And no, and it's not intended to be, and this is for everybody, because guys, your pictures set off great lessons. So you said 34 or sooner, right? So 34 is right here. It gives you, and I like 34. 34 says, I'll let it go to the first correction point. I'll let these pink 1-to-1s, right? 34 is at a point where I no longer want to be in the trade. And Jonathan, I think that that's an intelligent stop. And I don't know that it would have worked. No, so you just got stopped out. So I think that's a great first stop. But then once divergence prints, you have to readjust expectations, right? It wasn't a bummer. So Jonathan, what this trade is right here, the same one Paul took, from right here, I'm going to show you this right now. What is this trade? This trade is the I have a crap load of trouble, but I have killer momentum. I'll wager a small amount on the advantage of momentum beating out the disadvantage of 3 areas that only have the potential to break. Does that make sense, everybody? That's what these trades are. When you guys take a 50-50 look, and what you're doing is you're betting on the breakout. That's all you're doing. You're betting on the breakout. You're betting that momentum continues the uptrend. So it's not a bummer trade. Losers are never bummers. If there's a reason for taking them, if there's an advantage taking them. So with this look and everything going up, guys, that's a pretty good look, right? That's a lot of momentum. That's a solid area. That's manageable risk. I love it. I love everything about it. So language becomes important. So what do we have now? Now we have a 50-50 trade with divergence. This represents the bottom of the window of opportunity. But what are the other things that we see, guys?
Order canceled.
We see a bad bottom. We see 1, 2, 3, 4 areas that may stop the market and already have. We see split triggers, right? So I'm not saying that there may not be a long opportunity, but I'm saying this is not even close to the best of the best. Absolutely, John Novak. Thank you for asking. John says when a termination pushes through, there's a 50-50 trade. Well, there's the termination. I like this one. This is expectations. Very nice, Cav. Congratulations. 80% wins. Can we go through John Novak's whole chart since he didn't annotate? And this is pretty cool, guys. John Novak, for those of you that don't know, he wrote the software. I'm going to start on his left chart. This is a 21-3. Guys, this is NASDAQ. It's a little different. This is a termination, and this is a termination condition, guys. And what do termination conditions mean? Termination conditions mean that decisions were made at key areas that were impactful enough to reverse the market. And then John has, well, lower divergence on this chart. That helps. Large chart is a termination condition. So now we go back to expectations. When I get a termination condition with divergence on all charts, this area becomes more likely to break. He knows that, right? He's in the momentum phase of his small triggers, and there's the pullback. And I'm going to show you this, and I know that he's going down memory lane with this trade, because in 2003, 2004, when a fib holds and reverses the market, sell a pullback to those small triggers. So when a fib holds, sell a pullback to those small triggers, they line up with the large triggers right here. And John says, I'm not going to get in on the way up with divergence. I'm going to let it start heading down. And he's creating expectations. And sure enough, there's the first fib. And now the triggers are too far away, so he's going to lock in some money and not be willing to lose. I absolutely love it. And recognition of the gap theory keeps him from holding on. So what did we learn? We learned that termination conditions create powerful moves with potential to break areas. We learned that pull back to the small triggers after a termination condition gives an opportunity, that recognizing fibs gives a great target, and that understanding that when price reaches a fib and the large triggers remain a full bar away, it may close the gap. Guys, you have to be able to put all of this together to be able to manage this trade the way it was managed. And that was target one. Let's go back to his targets. It's not a mistake that he was willing to take half off at this fib, right at the low. Guys, there's so much going on in this trade. So if you look at John Novak's charts and you say, I want to trade like John Novak, well, you better find some place to sell you the 27 years of chart reading to make you react this quickly. What are the timestamps on this one? You were in at 54. It hit the fib at 56. And you were out of the trade by 57, guys. All of this happened in less than 3 minutes. I love it. John Novak, thank you for posting that. The better you get with your software, the quicker you can establish your reads, the easier you can manage. So, Paul, there was your bottom of the window of opportunity. There's your gap theory. Nicely done, John Novak. And Andy, there's a lot of genius that goes into it. I'm going to sound like a broken record real quick. So this spreadsheet has about 600 pictures on it. John Novak has about 45,000 pictures. 45 1,000 pictures of patterns. He's probably got 10,000 hours of market replay. And guys, it's just repetition. The more you see things, the easier they are to catch. The more you study a pattern, the easier it is to recognize in the moment. So there's the first one, out at trouble, out at trouble. And that was at 10:23, and you patiently waited a half an hour in between trades. They're the exact same trades going the opposite directions. I love it. And this is where privately I'll make some jokes about sand and parts drying up, but it's a great trade, and there's never a problem getting out of trouble. There's never a challenge getting out of trouble because sometimes trouble holds. So nice job, John Novak. Guys, I'm going to take 5 minutes. I'll leave you with the S&P. We'll see what happens. Guys, post them if you got them. If you have a question, post it in the room. If there's something you want to share, post it in the room. I'll be back in 5 minutes, and we will finish up class. Back in a minute. Hey, baby. That's my good girl. Oh, you want to make a run for it? You want to make a run for it? Yes, I do. Yes, I do. Strawberry? let's go finish the hour. All right, guys, I'm back. Oh, Lenny's here? Shoot. Just kidding, Lenny. What's going on, man? Nice to see you. Two things that I want to talk about real quick. The first one, this look that John says is going on the NASDAQ right now. Man, we took this picture earlier, so check this out. This is the NASDAQ 2024. This, that's not it. Hold on. Well, shoot, I know we took a picture of it. There it is. This is crude oil from this morning. And this is what looks like crude oil in 2021. So here's a pattern. There's the same pattern. And then we saw the same one earlier today. I'm telling you guys right now, everything we do is patterns. Everything we do is stuff that is repeatable, that happens over and over and over. You guys want to go through the 50-50 checklist? Bad bottom, 4 areas not broken, divergence prints, split triggers. KISS plan says don't do it. Just saying. KISS plan says don't do it. And it all starts with a nasty little bad bottom here. So if you're in, I hope you're getting paid at trouble and managing aggressively if that's what your plan says. Guys, we have about an hour. So I want you to start thinking about what it is you want to talk about for an hour. Otherwise, it's going to be a long hour for all of us. You guys are allowed to leave. I'm not. Paul, man, I was hoping I would be able to get your pictures back up. I wanted to go back and visit them. But they're still not working. Plenty of years of charts to review ahead. I like that. Keep me busy, Paul. Keep me busy. Hopefully John Novak gives us an update. Uh-oh. Counter trend not to be mimicked was a 2-lot. Still fibs may hold, so break even, tick on your tiny counter trend trade. Waiting for divergence, at a termination, another divergence, and the white bar down. If you're going to take a shot, that's the best shot. Nicely done, John. S&P says down. And crude oil, look at that. Weak triggers at a pivot stop out. Man, these two charts don't line up at all. What am I supposed to do there? If my rules aren't met, I suppose I could do nothing. All right, guys, this is the part where, there you go, Mr. Flowers. Here comes the broken record, ladies and gentlemen. To minimize your learning curve, post pictures of your trades in class, every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory but a long-term failure. How are you going to know the difference? To be sure, you need feedback from us. And when I say us, I mean me and John Novak. This guy wrote the software. He's been teaching people to day trade for almost 30 years now. Guys, we're here to help. If you place a trade on the simulator, if you're participating in class, it is impossible to lose money. You need someone to tell you what you did right or wrong, guys. And that's the educational magic that we do. That's what gets you to where you want to be, is that feedback, is that conversation. is all of that stuff. And then John, looking for that first one. So John, maybe you can tell us. And guys, this is interesting to me, and it's okay to pick brains. What makes you believe that these one-to-ones are a better first target than this fib? Just curious. Because this is the stuff that interests me very much. Is it the second lower divergence? You're anticipating a bigger push? One-to-ones catch over on a fibs. That's what I was hoping to hear. So you're counting on the overrun here. Because of the termination, because of the second lower divergence, because of your range chart, you're creating expectations based on your read. And you're not willing to lose in the event that that fib does in fact hold. To know what it takes to get in, you have to understand how you're going to manage it. And because of the top, because of the great top, because of the termination, because of the decisions that were made, it's such a key area. The areas below it are more likely to break than hold. And that's just an expectation, once again, from a chart read. And guys, all this stuff that John Novak takes for granted, all this stuff that he looks at and processes in a fraction of a second, you will too one day. The more time you spend in the market, the more time you spend looking, the quicker it's going to be. The S&P is struggling, right? Sometimes the S&P leads the NASDAQ, and they're looking for a little something, something. And that was the reason. Shorts only. Termination condition with weak triggers. There are 0 longs in the book, so you have to wait. I think it's cool. I think it's pretty awesome. Don't tell John this. John, mute, turn off your speakers. I think it's pretty awesome that the guy that wrote the software is willing to come in here and talk about what he's doing and what he's seeing and talk about how he's going to do it. And you took half again. Made the adjustment. Have to be out again. No big break. I see it. Well, I'm looking at both. I'm looking at where you exited. Right at a pivot stop out at one-to-ones and fibs, which corresponds with a fib with everything up there. Why is the 53.30? What is a termination condition bar, Jonathan? Can you show me a picture of what you're calling a termination bar? I just want to make sure that I know. That is your, let me look at your time frame. So, Mr. Flowers, you are an hour behind me in Central Time Zone. Which means that this is your 10 a.m. fib update. So every 2 hours, fibs update. And that's the beginning of your fib update. That's that 10 a.m. fib update. And something's going on. Do you notice that you don't have... Yep, that's the beginning of a fib. That is a fib sprout. And as price moves right, that'll continue to grow. So check it out. There's my 10 a.m. fib update. That's where it started, and it continues to the right. That's my 10 a.m. So you have a different midnight and different things. So you're just updating at a different time. Your 10 a.m. is different than my 10 a.m. If you feel like you need to be consistent with me, changing to Eastern will help. And then, so Jonathan, it's on the chart on my lesson. What's a termination bar? This is what's confusing me. Is it a reversal bar? I just want to make sure that I know what you're looking at so I can explain it. And I do this sometimes. There we go. Thank you for that. But you didn't circle anything. Can you do it again, showing me which one you're talking about? And while you do that, let's see what John Novak did. So it's the term of a term of a term at an HVA. Taking the short. Creates a bounce, creates a pivot stop out, high volume area. John says, let's go. I like it, John. Taking advantage. Everything starts with this look right here, guys. Everything starts with this look right here. And what's cool, and I don't know if you guys are noticing this, is that he made money on the way up. He made quick money. He made quick money again. And now he's getting paid in the same darn range over and over again. That's management. That's next level. Little early, Paul. Wrong side of the small trigger or calf. Trading against that momentum on the NASDAQ is hard. Get to the other side, you get an even better entry, and it goes all the way down to support. And then when it pulls back up, you can get almost the same entry. Got in late both of these trades. I think this one you got in early. I think you got out just a shade early. And this one, just picking your spot, trying to get it where you need it to be. Letting some fluctuations get you. It's not on my chart anymore. There was another term bar. I know you're not crazy. I'm not. So when you say a termination bar, Jonathan, do you mean the red bar? This is where I'm having trouble with what it is you're talking about. I don't have termination bar in my glossary. It's like people used to call the midband the EMA. One was red and the other was dotted red. Are we talking about the price bars? I'm a little confused. I hate to admit that I'm confused, but I'm a little confused. And John, nothing worse than being a victim of your own fibs, huh? Took 5 at the fibs again. Nothing wrong with that. Keep getting paid. We're in this to get paid, right, ladies and gentlemen? We are in this to get paid. And Jonathan, I apologize. I'm struggling to follow you. Look at the pick of your chart. All right, so hold on. And then let me pull up mine. all sorts of stuff here. Let's go side by side and see what we can do. I have an extra fib. So you have the 35 fib right here, and I've got an extra fib. Okay. So not a termination bar. We're going to call these fibs. That's okay. That's where I was getting confused. We're good. So there's a couple reasons that that can happen, Jonathan. Mine was an update, so let me see what your timestamp says. What time is it on your computer right now, Jonathan? You were fibbing. Wah, wah. Okay, so you are Eastern time. So chances are, because we're in the same time zone, mine showed up at the 10 a.m. fib update. There's a couple things that can do this, Jonathan. I'm 10 days back. One of the things that I do is I adjust my chart so much that I can corrupt data, but I also clean out fresh every day. Fresh data, kind of a rebuild, make sure that there's no corrupt ticks in there. And if you and I are a tick or two off because of my cleaning, different data feeds, yeah, there can be a discrepancy. This is where I always say trade your charts, right? Trade your own charts for sure. Don't try to trade mine. But there's a couple different things that can create that, and it's usually 1 or 2 ticks, right? Yeah, so it's a calculator, same data in, same output. So there's a data in discrepancy, I guess is what he's saying there. Term bar. I like that, though. That's what I'm going to call terminations. You hit your term bar. There's a pivot stop out. No reason to go long. There's that weak triggers thing again. Oop, and there you go, Jonathan. A little something from John Dovak for you. Termination, odds favorable, potential to break, no divergence. Oh, but it's right into a divergence low. Let's see what the old Pineski is doing. Is this gold? This is gold. Not a good top. Hits support, comes back. Now we're a good top. Absolutely beautiful momentum. Perfect entry. Quick profits. Looking for that second target. Gold was amazing last night. And only one spot for entry, right? Isn't that nice, Paul, when there is one line inside of favorable large triggers? Man, John, gold was an ATM last night. I think I traded for 30 minutes. I was up 1,700 bucks. Maybe 2 losers. It was rock star solid last night. It was fun. Gold, it is. Gold is definitely NASDAQ's little sister. Guys, everything looks perfect except for that darn, and look how it hit it to a tick. To the absolute tick. And look how the market rockets up. This is a great lesson on respecting lines. Great lesson on respecting lines. If you take a shot there, you better go at the top of the window. You would do it anyway without divergence on the low? But with divergence, oh yeah, without the divergence on the low. That's that 5-1 tiebreaker. Why would John take this short? Because there's no divergence, because there's strong triggers, because there is a termination, full reversal, odds favorable, everything says down, momentum is strong, but guys, it's still directly into a termination condition, right? So I broke rule number 2. If there's a new divergence, get out. But this is one of those things, guys, where you take this trade and it looks perfect, and then you look over here and you're like, oh, son of a gun. Son of a gun. So we're $150 per contract trading directly into a termination condition. Say it like that.
Order filled.
I'm risking $300 directly into a termination condition. Why don't I do that? Well, because that was one, and that was one, and that was one, and bounce, and bounce, and bounce, and bounce. And bounce, and bounce, and bounce. With the split triggers, you've got it going from 87 all the way down here, and your stop has to go outside. And John Novak would take this one. With a stop outside of the correction point. Because you have to ask yourself, and there is no right answer. For some of you, this is your trade. For some of you, you're going to say, I'll go through the bar fight scenario. And let me do that real quick. I exited because it doesn't matter. It's not a real trade. We're just talking. But this is a termination, and that's amazing. And this is a reversal, and that's amazing. And this is strong triggers, and that's amazing. And this is strong triggers, and that's amazing. And this is a clearly defined area, and that's amazing. Yeah, maybe marks. And this is downtrend and downtrend, and there's all these reasons that the market is more likely to go down than bounce up. And there is one spot that is problematic. If you're a high probability trend trader, if you are working on your adherence to rules, then there is no trade directly into a termination condition. That's that blanket rule, right? But once you're a chart reader, there's very much a trade, and there's a management opportunity, and there's the ability to make something out of nothing. And this, I love this one, guys. It is drunken rugby team against the chess captain. Who's got a better shot of winning? Where is it stacked? And then Mr. Flowers, do you see? That's your window of opportunity right there. Initial stop goes beyond the correction point. And the captain's smart enough to run away from the bar fight. Stay out of a trade. And here's the thing, guys. If a divergence prints, that's probably the end of it. So if you took it, you have to manage it. And we'll see what happens. And I think that one of the reasons the blanket rules are so effective for new users, guys, is for the average human being that's a brand new trader, the second you're in this trade, you are 100% committed to it dropping to the depths of the earth. And you don't have it in you to manage it because hope takes over. And a lot of you get out on the reversal bar there. And John Novak says, there's not divergence. I'm staying in the trade. And sure enough, the rugby team wins again. It has, Cav. Today, all day, there were FOMC members speaking, so I'm not sure if that had anything to do with it. And now we're right back to trouble, guys. Now your divergence low is a pivot stop out. Another great management opportunity. Let's see it, John 20. Does it fit your rules? I don't want to call it good or bad. Let's go through advantages. I'm going to give you my read, and I want you to answer the question. The background is green and the market is going up. I like it. I have odds favorable momentum. And then the lesson that we get every day is this right here. If price reaches areas and the triggers remain below resistance, that area may stop the market. It's a termination condition. It's rule number 2. And rule number 3, so here I can say 100% without hesitation that rule number 2 isn't met, that we have a termination condition. So if I come over here for the tiebreaker, divergence directly into a termination condition is rarely going to be the best of the best for you. I won't say whether it's a good or bad trade, John 20, but I think that without a clear path, the likelihood of success goes down exponentially. Does that make sense? And this is just taking it back to the three most common advantages that we teach in the classroom every day. Momentum, you had it. Strong triggers. Clear path, you did not. And then areas inside of favorable, you did. So you gave away 33% of your advantages. And in this particular case, it looks like it worked against you. And I'm curious, one thing that I'm curious about here is this is 7:52 in the morning, and this is 9:26. So I can't see your large chart, John, and it may be a much better trade than I'm giving it credit for. If you click this arrow up here, it'll bring you to the most current bar, and you can line up your entries on both charts. Because with this look, I can't see what's happening on your large chart. I can only see your entry on the small chart. And this may be termination conditions everywhere. But here the price is 57. And 57 is so far off screen below us, I'm not sure what's happening. Does that make sense? So unfortunately, I can't tell you if that's a good trade. I don't have any large chart information. All right, I'm just going to say it. Hoping support breaks. Large triggers are still green, right? Large triggers are still green. No divergence, pivot, stop out. It's the right shot. We'll see what happens. Rooting for you, Mr. Novak. All right, 13-2. Iron Mike, did you recognize that you have two 13-2 charts, my friend? I have a 13-2 and a 13-2, so you're trading the exact same chart. This one just doesn't have large triggers. So you're probably going to want to build a 5-1 chart. I like the look on the large chart though. That's okay. You've got everything saying down right at the mid band, and you're like, let's go. Hopefully that works out for you. And then here's Paul with the same look. Paul looking for a little momentum style entry there on crude oil. Waiting for the up bar to bounce off of that pink 1-to-1. And then, Jonathan, where are we talking about here? You've gotten away from annotating on me already. All right, and John Novak, I need you to just say it out loud for everybody, if you would. I traded into every freaking blue line on the world, which for the average user is financial suicide, but for somebody that can read their charts in a hurry up and piece it together, it's an opportunity to make a little money. Guys, this is one of the things is you're going to see John Novak take these trades and you're going to go, oh my gosh, he's such a badass. I want to do what he does. You don't have it in you yet to do what he does. And then, Jonathan, what did you do? Where? And I know I sound like a nag, but you're not showing me. I know, I just opened it. I just opened the picture that you put in the classroom. There's no annotations, there's no entries. I'm just not sure what you did. Well, do it right now so that we can talk about it. That'd be awesome. I'm just not sure which momentum trade that you took. Guys, I want to give you everything that I can, I promise. Let's go to the S&P. No worries. Oh, they're on your chart but not capture. So maybe you took the picture and then you wrote it on the chart. Make sure that you're writing it on capture. And Paul, it looks like you got your entry. Nice job. There's 2 divergences on a 50-50 now. So if you're talking about a momentum trade right here, Jonathan, we didn't have momentum. The smalls are on the wrong side of the large. What do you want to talk about, guys? Then Mike, did you fix that one? I think it looked like I was hoping that Paul was posting a gold trade, but he didn't. Here, I'm going to get rid of my ES. And let me load up gold real quick. Then we'll find it. No worries. I'll pull mine up real quick and we'll see what it says. I'm really curious to see what the 5-1 said. because it was a great look on the large chart. That was it right there. So it was a good look. 90 degrees in Western Mass. Whew. Go have fun. Get some sunshine, Cav. So Mike, your entry came from somewhere right up here. Nice job. Nicely done. And then crude oil hits that fib, and sure enough, there's a bounce. And then, guys, John Novak reminding you to make sure that you always trade in determination conditions. Don't worry about split triggers. It's just, so Mike, right click and go to templates, load. The challenge, Mike, is that it's a 13-2 chart as well. So what you need to do, let me open mine up and I'll show you. It's not just the template, Mike, is you need to go new chart and you need to do that gold. You got it? And make sure that this is a 5-1. Because the 5-1 template on a 13-2 chart isn't going to work. And then your template is right there, that 5-1. Where'd it go? There it is. Cool. You all set? Awesome. John, your point was it was a termination condition at the top? Odds favorable momentum. I like it. Price reaches support, triggers remain above. Price reaches support, triggers remain above. Price has divergence directly from the fib. John takes a pivot stop out entry. Gets paid at the first one. So guys, what makes, and I'm not going to say okay, why does John Novak feel comfortable attempting to make money in this section? Why does John feel okay trading into a termination condition? Why does John feel as though it's not a problem to take this trade, guys? Everything starts with this. Whoops, wrong one. Everything starts with this, guys. Pivot stop out, at resistance, weak triggers, everything down. This is the look that makes people take chances. This is the look that justifies seemingly aggressive trades sometimes. And I think that's the part that may be missing on the whole, guys, because if you don't have the ability to piece all of this together to take that trade, then you're just going to trade in the termination conditions, right? Why is this termination condition any less, more likely to hold compared to this termination condition? Why did he exit here, but he's still trying to go short? Guys, there's a lot of factors that fall into this here. And then here's the one that I wish you would have posted in the beginning. As a new user, learning when to no longer go long is very important. And you may get some extra trades after you know what you're doing. And eventually, as a new user waiting for trend trades, it will happen, it always does, just showing there's more to be made as you get into year 2. This is not when new. So if you're really trying to figure out the basics, guys, this is going to confuse the ever-loving hell out of you. Try and filter it. There we go. I got you now, Jonathan. So That's okay. This is perfect timing. All right, so Jonathan, momentum is outstanding, right? And you said you took a momentum trade and you waited for the snapback. The only challenge that I'm seeing is that there is no momentum. The smalls are on the wrong side of the large, so it's hard to call this a momentum trade. So what this trade really is, Jonathan, is it's already left the building for momentum. This is a 50-50 trade at this point. It's no longer a momentum trade. We've gone into that medium probability trend trade. But it has two divergence, which means that the path isn't clear and we're losing momentum, and we need momentum to break areas. So this one kind of goes a little bit outside of even medium probability, and after that second divergence up there prints, this becomes a very difficult trade to take because you're losing not only the advantage of momentum, but also you still don't have that clear path. Does that make sense? And then let's celebrate. The momentum is outstanding on the large chart, and your entry is exactly where it needed to be if maybe we didn't have those divergences printing. Good stuff. I like everything about it. I think just that loss of momentum on the 50-50 hurt a little bit. And then, is this Andy? Andy says, with everything up, I'm going up, and then with everything down, I'm going down. Just quick hits, right? And Andy, this is probably the best look right there for it. Good stuff, man. Trading with momentum, trading with trend. Force them to take you with up bars, says Paul. Nicely done. And then Cisco. Not a pivot stop out, Cisco. Just from a language standpoint, this is just a pivot with a loss of momentum. That's all it is. In order for it to be a pivot stop out, price has to come back up and then trade below, like this one right here. Hey, Iron Mike, have a good one, man. Pivot stop outs require price going back above and back below. This is just a loss of momentum, which is cool. It reversed the market. Everything's down. It broke. You take the trend trade and you get paid, and then you jump back in early, two divergences, and you're hoping, and you have to ride all of that nonsense out. But you do, and it breaks, and then it pulls back, and it goes. And you're just capitalizing on that trend all day long, man. Good stuff. Just trading with momentum, trading with the trend. It's amazing how often that works. 10 pictures for market day, get you where you want to be. Amen. I like that. Apple a day for the doctor, 10 trades for Mark. You can live a solitary life. Good stuff today, guys. Great questions, good lessons. You got to see my ugly mug. And I think that's the thing, Paul, is that it doesn't have to be trades. Just pictures. From this picture right here, this is how we're going to finish class today because I think Paul made a great point. Weak triggers, there's your retracement. Pulls all the way back to support. All the triggers above it holds. Not from an area. Support holds. Trades to the area. Breaks through. Hits the mid band. Creates the pivot stop out, which is a termination. And down it goes. There's so many great pictures. There's so many great lessons in just a picture. Trend trade-ish, guys. John marked this one up for you. Oh, that's the repeat. Let's see what it was. I like that you kept it. A lot of great lessons coming from John Novak. Great top, don't miss that one. Great bottom, great bottom. Don't miss that one. Don't miss these two from the great top. It's a great lesson. That's exactly what he's been showing us today, guys. Learning to trade is very much like learning to be a world-class sprinter. Eventually you had to learn to crawl. And then you have to learn to walk, and then you have to learn to jog, and then you learn to run, and it all just happens. It all just happens. You usually don't notice it. Nobody in this room remembers their transitions. They just happen, and they become a normal part of every day, and that's kind of how trading is. The more you do the same thing, the more you repeat the same process, the more you focus on the advantages, the easier it becomes, and the easier it becomes to catch a trend trade, guys. Because it's not moving, Jonathan. And that's why we take pictures. So look at this one. Let's go to a perfect trend trade short. Absolutely nothing is moving. So it's easy to see odds favorable momentum. Nothing is moving. It's easy to see a pullback to resistance inside of favorable large triggers. So all you have to do is learn the individual looks and then piece them together for a trade. And that just takes a little repetition, a little bit of feedback, a little bit of practice. So 50-50, no divergence. Perfect. Termination, 50-50, no divergence. Window of opportunity. Beautiful entry. Nice trade, John Novak. Guys, this one is straight out of the KISS plan. And then he has a point to make. He had a high volume area there, just adding a little fuel to the fire. But it's a termination. It's a 50-50. Oops, wrong one. I'm going to show you guys. I'm going to take the checklist for the 50-50. And I'm going to take John Novak's trade. Is the market coming from a good top? The answer is without question, yes. Is there odds favorable momentum? The answer is yes. Is there smalls outside of the large? Yes. No divergence? Yes. Get in the window. Guys, this is 100%. This is the best of the best of the best way that you can take a 50-50 trade, but it's still a 50-50 trade. It's still an area that's not broken, which means that it can't be high probability. And John Novak, I'm with you. I would lose $160 on that trade all day long. Because that is the best possible way to take it. So, guys, that's it for me today. I'm going to call it. Great class. Thank you for being here. I appreciate everyone being here. I'll be back tomorrow morning at 9 a.m. We're going to do it again.